a city known for freedom, and I'm honored to follow Senator Haggerty and address you today. Today, I've decided to use slides. And for those of you who've seen my presentation, some are with slides, some are without slides. I got a lot of good comments on the ones with slides, and so I figured the best way to make this presentation better was more slides. So number go up, and with no more delay, I want to talk about the Bitcoin revolution. And I also want to talk about rebuilding our global economy with digital capital. The world, as we know it, is based on 20th century ideas and 20th century technology. Stocks trade 9:30 to 4 unless there's a bank holiday. You can't do things on the weekend. Everything is slow. Everything is expensive. If we want to prosper in the 21st century, we need new ideas, and they need to be based on new technology. This chart you've seen before, I popped it up. It's $900 trillion of global wealth. It's that $900 trillion, it's spread across physical assets and financial assets that are 20th century ideas, 20th century technology. And in the upper left corner is a little orange blip, the little orange asset that could, what we call Bitcoin. It's $1 trillion. It seems like a lot if you started with zero, but when you look at it against the greater scheme of things in the world, it's 0.1%. Here's another way to see that same chart. It's not 900 trillion of assets. It's a bunch of assets held for their utility value and a bunch of assets held as a store of value, long-term capital. When I buy a house, I want to live in it. But when I buy a bunch of bonds, I just put my money there because I didn't know what else to do with the money. And when you start to see the world as a big chunk of long-term capital, $450 trillion or more of capital, and you start to think about the way we store that capital, you see the engine for the revolution. The global economy struggles because we're relying upon imperfect assets and imperfect systems to store that capital. It's crippling our capital preservation. So how do we engineer a better system? Well, this is Tesla, and Tesla had a quote. He said, "You want to understand the universe? Think in terms of energy, frequency, and vibration." I'm going to translate that. I'm going to talk about the physics of money now. What are the physics of money? Energy is money, or capital, or wealth. You could use them interchangeably for this speech. Frequency is about the duration or the lifespan. How long will it take? A minute, an hour, a year, a century? And we vibrate money every time we trade with each other, or we transfer from one locale to another, or we transform a property into another type of asset. And so here is an important equation. This is useful life is equal to the value of an asset divided by the cost to maintain that asset. If you're looking for the useful life of your money in an asset, then the way to figure it out is ask, how much does it cost every year to maintain that asset in pristine condition? What do I have to spend in order to avoid depreciation or decay? It turns out that useful life, is very close to something we know in the Bitcoin community as stock to flow. They're very related if you're measuring them in years. Many individuals and most corporations, they use financial assets to preserve capital. And this is the source of a challenge for us. Let's talk about financial assets. I want to keep my money for a long period of time. Start with $1 billion, put it in the peso, and the money is decaying in 2 years, right? A 98% inflation rate strips you of your economic energy or your capital. This is not a good long-duration asset. The Turkish lira, your capital lasts 3 years. The US dollar, under traditional monetary inflation for the past century, might last 14 years, but it's not like you have it for 14 years. The life is being sucked out of you linearly over the 14 years. Put your money in a hedge fund. What's the annual cost? It's 2% management fee and then 20% of the upside. About 4% a year if you're investing in normal assets. That means it's a 25-year asset. Treasuries, you're going to get a yield, but the 3.5% after-tax yield goes against the 7% monetary inflation. Maybe your money lasts 30 years. Capital in a mutual fund where you pay a 1% fee, 100 years. That's about the best you're going to get. If you manage to buy a diversified portfolio at 10 basis points, the counterparty risk is going to drive you to a 1% cost. So those are your financial assets. We're running the world on a 20th century set of ideas, and on average, a financial asset is going to last you 30 years. We all know inflation dilutes the value of financial assets. But inflation is just the tip of the iceberg. You're also going to get diluted by tariffs and tolls and torts and transfers, taxes. We got all sorts of taxes, income tax, capital gains tax. Every time you vibrate and move the money, you get taxed on the money. And then if the taxes don't take you and the torts don't undo you, you've got weather and competition and obsolescence and politics and catastrophe. Those are the things that dilute the value of your capital over time. And if you want to maintain economic energy, you have to fight against that friction. Well, most people realize that's a frustrating endeavor and it's a no-win endeavor. So they give up on financial assets and they start turning to physical assets to preserve capital. Well, here's the physical asset, a Ferrari. Not a good way to keep your money forever, though, because after 5 years, you've spent as much on the insurance and the upkeep and the depreciation as it's worth. Yachts aren't much better. If you spend 10% of your money operating it, you also get hit with depreciation. Don't store your money in yachts. A home in Miami Beach, if you buy a $10 million house, you better come up with $10 million to maintain the house over 17 years. Now you've got no money left. Silver, 22 years. A warehouse, 40 years, maybe 50 years. Bar of gold, 62 years. A painting, 72 years. Land, the average property tax in the United States is 1.1%. That means your money is going to last 91 years unless the government reassesses the value of your property. Then it's going to last less than 91 years. The oldest family ranch in the United States is King Ranch. They made it 173 years. Every other family in the country failed. And here's the longest held property, the Crown Estate in the United Kingdom. You could say the royal family held it since 1066, but on the other hand, it passed from the Plantagenets to the Stuarts, through the Lancasters and the Yorks, and eventually found its way to the Hanover family. And so maybe 7 different families split that. None of them got to take it with them. So physical assets you might think might last 1,000 years. Probably about 50 to 75 years is the best you're going to do. Entropy is diluting the value of your physical assets. It's sucking the capital, the energy out of them. There's a reason it's called earth and not heaven. Because politicians are very creative. They got a city tax, a county tax, a state tax, a federal tax, a transfer tax, a usage tax on the property. And if that doesn't get you, there's rent control, price control, or a culture shock. Then you got competition. You might get discriminated against. There's recession. The currency can collapse. Your tenants won't pay you. Someone will slip and fall on the front sidewalk and sue you. There's weather, war, crime, and catastrophe. And if energy prices go through the roof, it's going to be hard for you to make a go of it. Physical capital is not a simple solution. Something I learned at MIT, the 3 laws of thermodynamics. You can't win. You can't break even. But you can't get out of the game. So you could stop right here and be a little bit depressed, but then again, we don't want to lose. So you start thinking, what if we could find a way out of the game? Then we could break even. Then you could win. Satoshi found a way. He gave it away. And he went away. And that's Bitcoin. Bitcoin is digital capital. That's what he created. Bitcoin's immortal, immutable, and immaterial capital. And I use that in this sense. It's got an infinite lifespan. It's not being attacked by the forces of weather and entropy and inflation. It's immaterial in the sense that it's not in the physical world. It's not suffering from all of those parade of horribles that are the scourge of financial and physical assets. And it is the solution to our economic dilemma. The transformation of our capital from financial and physical assets to digital assets, it solves the problem that we're all facing. Now, how long-lived is Bitcoin? Well, take your Bitcoin and put it at scale with a custodian, an institutional-grade custodian. You pay 10 basis points. By the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't teleport the King Ranch. And so Bitcoin is that thing that you can move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset. And what happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want the Bitcoin. If they have a choice between owning the Bitcoin and owning the ranch in Texas or owning the bar of gold or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction. So let's talk about some great trades in history, some trillion-dollar trades. The Dutch understood naval power. They understood ships. They had thousands of them. They bought the best port in the New World for a couple of $100 in plastic and textile trinkets. And that's worth $2.5 trillion today. Okay? It was an investment that's returned 6% for 398 years straight. It's a 10.5 billion X return. And if you think about it, you're like, why would I actually give up the best port in America for a bunch of textiles and plastic and glass? But the people that sold the thing to them didn't understand naval power. If you don't appreciate the reason you're going to want the property, you won't value the property. Napoleon wanted to gallivant across the old world, and Jefferson wanted to expand in the new world. So France sells Louisiana to the U.S. for $15 million in 1803. The $15 million probably lasted a few months fueling the French army. It's gone. Jefferson got that. He got 27% of the United States. It's an 800,000x return. Worth 12 trillion or more. It'll be worth more. Jefferson had some vision, as did this man. Seward pays $7 million for Alaska 2 years after the country's decimated by the Civil War. John D. Rockefeller was trying to start an oil company. Today, there's $1 trillion of oil underneath Alaska. It's a massive return for a piece of paper. How much is digital capital worth? Take the $450 trillion, multiply by 3%. That's your entropy cost or your inflation cost. It costs the world $13.5 billion a year to take all of those parade of horribles when they're trying to preserve their wealth. If you put a 20 P to E on it, like you value a company or a long duration bond, that's worth $270 trillion. So digital capital is worth 10, 20, 15 trillion a year, and it's worth hundreds of trillions of dollars. Reality check. Is he full of BS? Well, digital capital is returning 55% for the past 4 years. Financial capital, the best in the world, is the bond. It's minus 5%. Imagine capitalizing your company or your country on a minus 5% instead of a plus 55%. It's obviously working. And now let's come back to my chart here. Global wealth, we can look at it like this, and we see the little Bitcoin, square in the left corner. But what's happening? Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then. What about the rest of the assets? Well, I actually think that AIs and technology are going to revolutionize tech. We had no companies worth $1 trillion. Then we had a bunch of $1 trillion companies. You're going to see more because you're going to see companies with 100,000 AIs and no employees, and they're going to do the work of companies that used to have 100,000 employees. You're going to see mega corps develop, shipping robots and self-driving cars, and a company that gives a personal physician to 1 billion people without any doctors on the payroll. So clearly, equity is going to grow fast. Gold's going to get demonetized. Land will be less monetized. But look, here's the future in 2045. Doesn't look that revolutionary. It looks like today. It's just that Bitcoin is visible on the chart to you. When Bitcoin is visible, that's going to be the base case. Now, what are the implications of this? How do you make money? Well, let's talk about individual Bitcoin strategy. What should you do? Make Bitcoin your primary treasury asset. Convert your excess earnings to Bitcoin. Utilize subsidized credit. If the government will loan you money, borrow the money at cheap rates and buy Bitcoin, and find a tax-efficient way to invest the Bitcoin. What shouldn't you do? Don't quit your day job. Don't lose your focus on Bitcoin. Don't use margin loans and trade with leverage. You get wiped out while you're asleep on a Saturday night. That's not good. Good, 30-year loan for 3% backed by the government on your land. Bad, overnight 10x leverage. So what's a typical person? Well, we actually model an individual, and we said, what if you had $750,000 in net assets, and you made $200,000 a year, and you're going to make 5% more every year, and you got a savings rate of 25%, and you can invest $50,000 a year. Well, there's a lot of strategies. You could be the normie and do a normal strategy, diversified portfolio. You can be a 10%er, and you can put 10% of your assets into Bitcoin. You can be a BTC maxi and put 80% of your assets and put 80% of your earnings into Bitcoin. You could be a double maxi, and that's when you basically take an extra $250,000 loan against the house. And then the triple maxi is you finance the house for Bitcoin, you buy Bitcoin, you flip all your assets to Bitcoin, and then you move to a cheap tax jurisdiction where you actually can avoid some taxes and invest an extra $50,000 in Bitcoin, maybe a Singapore or UAE or something. What's the result? Well, this is the result. The normie ends up with $8 million in 21 years. The 10%er will more than double that. The maxi ends up with $100 million. The double maxi, $150. The triple maxi, $214 million. You can see the power of leverage, and the choice is yours. And you can also see, it takes 15.9 Bitcoin to be a triple maxi. 6.25 Bitcoin will make you a wealthy person. Let's talk about corporations. Dues. Convert your capital to BTC. Convert your cash flows to BTC. Issue equity to buy BTC when it's accretive. Issue debt to buy BTC when it's accretive. Don'ts. Don't bleed your capital with taxable dividends. Don't surrender your capital with stock buybacks. Don't dilute your shareholders with risky, overpriced M&A activity. Here's our typical corporation. $100 million of cash flow, $1 billion of enterprise value. It's growing. It's generating a lot of cash flow. Its share price is $100. And now the issue is, what's your strategy? Normie, maxi, double maxi, triple maxi. Well, the normie's going to be okay. You'll have a $1,200 stock price, but just 10% allocation doubles it. The maxi is going to nearly 8x it. The double maxi is $17,000 stock. The triple maxi is $28,000. What kind of company do you want to run? Reality check. This is a triple maxi strategy at work right now. This is MicroStrategy. It will be 48 months on August 10th of this year since we started down this road. 48 months. And, if you're running a company, and there's 300 million companies out there, if you're running a company and you think you can do what Microsoft